Good morning. Hey, we got some ISM. ISM, Baba. ISM, Baba. You guys excited? Yeah, me too. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky. Oh, hello, good morning. Not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble. Focus on the long term. Never risk money you cannot afford to lose. Cool. Here's the value ladder. You need two things to be a successful trader and investor. Execution. I guess we'll do it this way. Well, we'll leave it at that. I'll pull it up here. Execution. And you need good data, don't you? Data and execution. So you need to be able to gather intelligence, formulate a strategy, and then you need to be able to execute the strategy. Straight through processing is what you get at Trader's Way. That's exactly what you want. It's fast, it's effective, and guess what? It means Trader's Way doesn't trade against you. Great, now everybody's freaking out. They're like, Wayne started his webinar and let's everybody ring him. Cool. Anyways, you need to be able to gather intelligence, formulate a strategy, and then execute the strategy. And this is the perfect storm, so to speak. Trader's Way with traders.com. That's exactly what you want. Taking a look at today's schedule at traders.com. Today we had the fundamental trading team meet. Later today we do simulation studies. Then late this afternoon at the New York close, we will do the swing trading meeting, which we plan out all of next week. And then tomorrow I'm over at FX Street. You'll find me there. So that's the current schedule. We'll just do a little quickie look around fundamentally and technically. Bitcoin back down to 60,000. Dollar up a little bit. S&P 500 flat, but still above 5,700. Gold kind of flat, but below 2,700. Oil up big time. Geopolitical risk. Yep. Oh, for sure. It was 72. Now it's a little bit lower. But remember, our number was like 67, and now it's 72. And yields are back up. They were down yesterday. Now they're back up today. Boo. We were -4 on the risk off. Now we're at -2. Swinging around. Looking at the scatter plot. Platinum, copper getting crushed. Oil and Nikkei up. What the fudge is that? And everything else is mixed. On the calendar today at 10 a.m., which is about 40 minutes from now, we will have ISM services. In a couple of minutes, or in a few minutes, we will have weekly claims. If you want to understand what the importance of these numbers, well, you should be a member of traders.com. because I can easily take you to weekly claims. Okay? And I can easily take you to ISM services. So you should be well informed of all of this information. And if you're not, maybe this is why you're getting run over by professionals, huh? Yeah, Google has been crazy slow the last few days. Come on, Google. Well, maybe it'll let me just manipulate the data. There we go. So, for example, 18 months. Isn't that cool how you can manipulate the data? Yeah. So you understand the context of where we are and the importance of the numbers. Very cool. Now, we have ISM services. The thing is that we know it'll create volatility, or we assume it does. But does it provide reliable, repeatable patterns? And according to our scalping section, when we analyze all of the ISM services going back years, it might create volatility, but there's no reliable pattern. So you might get a one-off trade, but it's a risky trade because we can't give you any sort of edge because no edge exists. There is for non-farm payrolls tomorrow, and I'll cover that at FX Street. Cool, right? So that we have trade plans if the actual is greater than 140K. Okay, very simple. Okay. Or less than 140K. Very simple. We have all the data. Look at that. Look at the difference. Up or down. Up or down. It's very cool, right? Yeah. Well, traders.com is cool. So that's good to know. Right now, this is the best time of day for trading. I hope you've been using the implied volatility tool. Okay. Right now, I only have stock indices on. But you could do, well, put everything on. And you'll see it's a good time to trade everything. Okay. It's a good time to trade everything. Yeah. Now, obviously, this changes throughout the day, and you should be aware of that. Yeah, the problem with showing you this tool this time of day is everything's good. It's the open of the U.S. trading. So there's going to be a volatility, but you'll see over the next few hours, you'll need to be informed on what to be trading and what not to be trading. Yeah. So like if you are trading Bitcoin, Bitcoin's down, right? And it's a volatile day. Or volatile time of day. But notice what's going on here. Okay, the implied volatility for Bitcoin was, if you're a bear, that's based on this time of day, on this day of the week, that is the selling zone for bears. Based on, I think it's 6 months worth of candles at that time, on that day. So anyways, the short-term projected low is here, but the daily low is here. So really, if you are a bear, that means you're a trend trader. Okay, and you should have looked for that being a sell zone, but your target would be here. I just got to double check. My phone is just crazy on fire. Okay. So that's how you want to read through on some of these. And, okay, great. Remember, volatility doesn't identify trend. It identifies range. And then we break it by time of the day. So the range of the next hour, range of the next 4 hour. So for me, 4 hour daily are most important on these smaller time frames. Now, when you use the fundamental hit list, for example, so let's just pick one. I'll just open this up over here. I'm assuming you're using your hit list every single day. So like Aussie dollar, for example. Okay, great. You find your Aussie dollar. Now, you might be able to just do it this way. Okay, so you're interested in, let's say, no Forex except Aussie dollar. Okay. Interesting. So, USD has gotten stronger than Aussie. Aussie was strong. Okay, obviously there's some risk off going here, right? Geopolitical risk, you think? Huh? Safe haven flow? Yeah, that's bad, right? Ruins everything. So, if you're going to trade this flow, if you're going to use price action, what would you do? Well, you'd measure the bottom. Okay? See? Then what? Well, not only does that agree with price action, that agrees with implied volatility. Specifically for Aussie dollar, okay, this time of day on Thursdays. And if your choice would be, your target could be there or your target could be there, depending if you're going to intraday or day trade. And your stop, okay, is going to be above here. And if it stays bearish, which trending, if it's trending down because of geopolitical risk, well, then it's more likely to continue falling. Okay? Unless a greater force is acted upon it. Well, it's interesting because economically speaking, you would think it would be going up. But a greater force has been acted upon it. And despite what's normal, you have people worried about war. That's abnormal, but abnormality happens. That'd make a great t-shirt, huh? Abnormality happens. Well, abnormality is too hard. Well, it's too long. So why don't we just say, shit happens. Cool, right? Okay, claims should be out. What did we get? $224, huh? 224. Oh, that's the weekly average, huh? 225 is the headline. 225. 225. What does that look like? Oh, 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 oh. Ooh. Probably going to get copyright slapped by YouTube. Okay, we'll look at her 225. 230 is the average. Okay. So it's higher than last week, but I'll tell you what, it's coming down. Oops. I guess I'll put this one back to calendar. So 225 is their average. 224 and a quarter. 225 the headline. And the Fed kind of wants this to be rising, not falling, and that's the issue. Because we're trying to translate this into, how does the Fed feel about this? Okay. So the 3-month average but we can do the 1-month average. And I have 224 and a quarter. Look, you have the same data now. Okay. 224 and the revised numbers, which I think are most important, 228, 231, 222, 219, and now we're 225, which is average. But the Fed kind of wants this climbing like 235 is where the Fed thinks it should be. And yet, okay, it's coming down. Week 38, week 40. Oh, it says week 40. Love it. See, week 40. Interesting. All right. Very cool. So you have all the same data that all the experts have, huh? Interesting. If you wanted to get a better look at it, that's here's another way. Okay, and the Fed they don't want, but they expected it to rise. And if it was rising, if the trend of this was rising just ever so slowly, it allows them to cut interest rates. But if it's down, it hinders them from cutting interest rates. So maybe this is good news, the idea that it's back up to average instead of below average, and maybe people will guess the next one will be higher. Oh, okay. That's a lot of guessing, huh? That's a lot of guessing. So we have news in 25 minutes. You guys want to do some technical analysis? Okay, dollar strong, Swissy strong, dollar strong. Oy vey. Obviously something's going on. Obviously risk off. Yeah, obviously risk off. And this morning I posed the question. I said, hey, do you remember in January I said the markets would be down in October? September would be down, October would be down, and probably by the third week of October we'd start buying again. And now I'm looking at here, it's the first week of October, and we have like massive risk off, and you're going to say, hey, well, that has nothing to do with your prediction. This is geopolitical risk. I'm like, I know, but I'm still right. So which one is it? Is it because it was supposed to happen anyways, and we have geopolitical risk? Or is it the geopolitical risk creating it? Well, how do you know? And you don't, actually. Now, you might feel like you do, and you might argue that it's one or the other. Or maybe it's a combination of both. Okay? Like J.D. Vance and Walls hanging out at a bar, agreeing on things. Sounds elite. Well, I'm an elitist. Walls looks crazy. Why does he look crazy? I didn't think he looks crazy. Oh, nothing works. Glasses don't work. Nothing works. Oh, I see. I'm saying elite sounds. Yeah, it was really good. Well, yeah. Well, I don't know. Some people say they don't. His eyes scared people. I was laughing at him like, his eyes? Yes. Well, what about his eyes? They frighten me. I can't vote for him. Okay. All right, whatever. Okay. Yen strong. See, triangle not happening. Oh, yeah, I forgot to tell you guys. Tomorrow at FX Street, I hope to be ready to offer you a download of the first version of our flashcards so you can get to know all these patterns. Do I have a version up on this machine? No, that's a Fed one. Oh, maybe over here. Oh, I have a Fed meeting today, don't I? Shit. I don't have time. Oh, my God. Anyways, and just sort of a sneak preview. How to trade this pattern. How to trade this pattern. How to trade that pattern, how to trade that pattern, how to trade that pattern, how this one, and 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 that's not all of them. Those are the ones I identified that day. And so I created a PDF in which you can print out, I think, 6 on one page and literally just cut them out. And you have little flashcards so you can play with that. And then there's some tweaks I want to make. So the tweaks I want to make once I have what I consider all the patterns. The tweak I want to make is to have a graphic designer do sort of like a blank version of this. So let's do it this way. And slideshow. This current slide. All right. So imagine this was blank now. Delete. I want to use that new Windows tool where you can delete things. Okay. Do you have this new feature? It's really nice. I wonder if I can just do this more easily this way. Yeah, even better. All right, so imagine you had a version on this, right? Like this. And then on the other side is how to do it. Okay? And would it be cool if you went to print the file and you said print on both sides of the page, and it printed one side blank and the other side with an answer? That'd be cool, right? Wouldn't that be cool? So you can literally look at it, think about it, say it out loud, and then flip it and get the answer, and then go on. Literally like flashcards preparing for a test. Is that right, Jim? That's cool. And if people actually like this, they're like, dude, this is so cool. I mean, maybe I'll find a printer. We could do print on demand, and you could just have them printed and sent to you on cardstock. Just like Jim's. Yeah. Cool. Jim, when did you make yours? Was it recent, like when I launched Traders, or did you do that like 27 years ago? Oh, is that right? Oh, okay. Well, you say mine are nicer, but did you draw yours by hand? Or did you do it on a machine or something? Because I think, in my point of view, and maybe it's just, oh, okay. In my modality, if I drew them with a pen on paper, the process of drawing them, to me, is a modality in which I learn. And I'll remember it if I had to draw it. Right? Cool. And wrote the details. Okay. Yeah. Well, still, that process is still pretty good. Something about the pen and the paper, though. But yeah, very cool. So I hope you guys are into it. I hope. So this is, the reality. This is the reality. I spent one cigar, which is about 2 hours a time, putting this together, right? So I found a bunch of patterns and I grabbed the data off of the site. Then I create the format, strength, weakness, opportunity, threat. Looks like there should be a semicolon there. See? And then I was done for a couple of days. And then I went to Starbucks with my daughter. She's studying for her SATs and doing homework. So I sat there with her for about another 3 hours, going through and doing more and then putting in the strategies. So I don't know. I've spent 4 hours, maybe. I was going to say 5, but probably closer to 4. So instead of watching Dancing with the Stars or Monday Night Football or whatever people do, I did this for you. But it doesn't hurt to remind that it's a real person making real choices, making real investments into you, and I'm going to give them to you for free. But just realize it's not free. I'm already like $20 in Starbucks bills and $2,000 a time. But I think for some people, it's really going to be helpful. The next thought is to put together a training course so that you have a video, right? You have a video with every pattern. Wouldn't that be cool? And then I can show you the probability of these patterns once they've come into fruition, once they've moved from emerging to actual. Then I can show you which ones are better than others. Okay? Yeah, Denise, I had forgotten about flashcards. I know there used to be anyways, and sort of an online version. I forget what they were called. People used them quite a bit, and I don't think they use them anymore. But one of the benefits of hanging out with younger people when I went to Harvard is I studied for an exam. It was international political economics. I had a rock star of a professor who gave you all the readings, and then you'd just walk in, no slide deck, no nothing, no notes, and you would talk for an hour and a half. and then leave. And you were expected to understand what he said in the lecture, and everything in the reading was fair game. But so I had studied for this, and then I flew to Cambridge to take the exam in the classroom. And I'm sitting there about 20 minutes before the classroom doors were open. You want to get there and, be organized, get your thoughts together before you go into the auditorium and do the exam, or the lecture hall, I should say. And anyways, obviously the 20-year-olds are there, right? The 20-year-olds are there, and me, I look like a creepy old man. Beautifully dressed, though. Suave, I would say. But anyways, and I see these kids, and they're working together in groups, which is a disadvantage for me because I don't have a group. And they were practicing with flashcards and giving each other questions. So they had created their own flashcards, and so they had memorized all their flashcards, but then their buddies had their own individual flashcards. So the buddy would read the questions to the other person. I'd give them feedback, and then they would switch. Okay, let me give you some of my questions. Okay, in 1942, blah, 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 right? Oh, and I'm like, son of a bitch. Because they had an advantage, right? First of all, they're working in groups and collaborating. And second of all, they were using flashcards, and I'm like, I had forgotten about that. Yeah. And so I'm like, huh. And so that's on my radar, so to speak, right? Pun intended. That's on my radar. I'm like, people use a modality like this to learn. I'm not a memorizer, by the way. So I'm not a flashcard guy, but it would work for some people. It would work really well for my wife, for sure. She's really good at taking tests. I'm terrible at taking tests. So for that, like that shorter term memory, you go through all these, you got it, good, take the test, boom, got it. But 6 months later, probably would lose most of it, right? Where I would just remember it forever kind of thing. But it takes me so long. So I'm not really a flashcard guy, but maybe making flashcards, making flashcards is helpful. Because here's the thing. Oops, wrong one. When I grabbed this and I was doing these, like I didn't have the answers because I made it up. I'm like, how would I trade this? I don't know how other people trade it, and I don't even really care. Right? So I had to go through, and how would I trade that? Right? Yeah. Anyways, lots of risk off is what I'm pointing out here. About 9 minutes until the news. Okay, lots of risk off. Oh, that reminds me. Hello. Oh, yeah. All right. TRADARS. To the traders community. Do you want additional crypto data and patterns? Please let me know what additional crypto you would like integrated into tradars.com. Please join the challenge and let me know what you stink. Okay? Let me know what you think. And yeah. So I have one piece of, one request. Okay, so when we go to the technicals now, it was requested, okay, that under stock indices, we add ASX. So we did. What? Actually, it'd probably be easier. Hang on. I haven't even checked it out. Turn them all off except ASX. It's not the right symbol, though, is it? I think they might have added the wrong one. There's no pattern. Or they're in the process. I can't quite see what that says. I know. I need... The funny thing is I skipped my eye appointment yesterday so I can keep working. That's the wrong one, though. Maybe that's what's going on. That's the wrong... That says AS51. They've added the wrong one. I think it's supposed to say ASX 200. Is that right? So they must be in the process. I don't know what that is. Maybe that's their internal symbol. But it's happening, bro. For you Australians who are sleepy, probably sleepy right now. Crikey, I'm sleepy. Well, I did that for you because you're beautiful. Yeah. Cool. See? So if you would like some more crypto beyond Bitcoin, Ethereum, and Litecoin, please answer the challenge. Yeah, well, Jim, let's just put it this way. I've had 2 meetings in the last 2 days, and they said yes. And then I see, right, they have access to the data. So I don't know. This is probably just not done, shouldn't be live. But I want to point it out that, well, something is being done. Okay? So that means the price of TRADARS is doubled. It's now $770,000 a year. But you got what you asked for. Well, you know what? Why don't we just keep it $299 a month? Okay, let's just do that. It's easier. It's just easier. I don't have time to update the website, so it's just easier that way, you know? Because I'm inherently lazy. Huh? As all cis white males are. All right. So that's that. So we got some vol coming up in a few minutes. And we're not going to be able to get it on scalping because, as I already showed you, it's a scalpable trade. There's just no edge we can give you through pattern recognition because there is no reliable pattern. That is useful information. Let me tell you. If you go back years of looking at ISM services, there is no reliable pattern if the news comes out as expected, greater than expected, or less than expected. It's a mixed bag. There's no reliable, repeatable pattern. Now, it's tradable, but you're taking that risk of trading when there's no edge. You're trading vol, but vol is bad. Well, vol is better if you have an edge. So you're like, no matter what happens, I want to buy a dip. Cool. I don't know if that's the right thing. Okay, that's the problem, right? So be careful, bro. Stock indices, descending triangle. Okay? So S&P 500, descending triangle. NASDAQ, descending triangle. Nikkei, channel down. Dow, channel down. Okay, DAX, channel down. So the only thing with up is FTSE. Does anyone know why? Type in your guess of why everything is down except FTSE. Night flight to Venus. Anybody know? Type in a question mark if you're live and don't have a guess. Which means there should be dozens of people answering right now. Global risk. Nope. Come on, everybody. You're talking like when you say pound weakness, you're describing a symptom. So how do you know when you're, what causes the flu? Fever. No, fever is a symptom of having the flu. Seasonality. No. Well, maybe, but no. PMI is expanding. No. All right. Yeah. Wade. Governor Bailey said earlier this morning that things are better than they thought they would be at this point. And there might be an opportunity to be more aggressive. AKA cut interest rates, cut interest rates in the UK and boost the economy. And you remember, it's simple math. Okay, simple math dictates up in this scenario. Let me change it, right? When you look at the expected return of a stock is equal to the risk-free rate of return plus the beta of the expected return of the market, aka the FTSE, minus the risk-free rate of return. Okay? So when you're lowering the risk-free rate of return, which is the assumption of what he said, the expected return would be up. So it's just math. FTSE's up because now they're expected to cut interest rates. And everything else is down because the main force around the world is geopolitical risk, but a force even greater than that has acted upon the UK specifically. So that happened, 6 hours ago, and you should be on top of that. Okay, here we go.
As expected, seeing some upside in the dollar.
All right. It's a bad number, isn't it? Did I read that right? No, I didn't read it right. ISM services 54.9. Oh my God. I think I read the employment. Yeah, employment down, which is good, but headline is holy smokes. Can anybody confirm that? 54.9? Jesus Christ. Oh my God, that is such a huge number. Damn. Like, prices paid 59. We have staggering growth. We have staggering inflation. And unemployment is falling. Contracting. It's not just falling. It's actually negative territory. New orders 59.4. Holy shit. So the future of ISM services seem to be booming. Durable goods flat. Wow, what a crazy number, everybody. These numbers are nuts. Wowzer. Holy smokes. Initial move on crypto. Not a biggie. Not a biggie. Not a biggie. Wowzer. Let's start with like a weak euro. See what's going on this sucker. Because the initial thought is maybe the Fed can't cut interest rates anymore, right? So watch this. Let me change this for you. I don't know if you use these tools, but okay. This is great for scalping. Okay. So if you're going to skippity scalp, the target is here. And the entry is here. Okay. Now, if it does a complete reversal, there's like the second opportunity is here and then that target. So from the 100 down to the 0, but let's not, that's not as common. But wowzer, huh? By the way, do you like how it draws that and I don't have to draw it? I'm too lazy. Again, I'm a lazy male of the species, so I don't like doing anything. I want it all automated. Automate everything. I want my automations automated. Okay, so now like if you leave those there, if you drop into the 1 minute, of course, it's going to change a little bit anyways. And you can see we had a pullback into the sell zone, so it's happened. The scalp has already happened. You see that? Let me redraw it. On a 1 minute chart, you have this kind of move, right? You see that? That's your sell zone. And it came up, hit about the 50%, about the 618, somewhere on that roll reversal. Okay, you see? Cool. Now we'll see if we get any follow through. Okay. We'll filter it out a little bit. Look at on the Fiverr. Fiverr guys like to have their chance. So again, if you're going to draw this differently, I guess I'll leave that there because that's the 32618. But if I were to visually do this and not mathematically, I'd connect these things. Ends up being exactly the same thing, right? But whatever. Oh, Bern, thank you for posting all those. Yeah. I read them out loud, but I appreciate that. Yeah. Yeah, employment is the 48, and I'm like, yeah, that's what I meant by employment contraction. Yeah. But I appreciate you posting them. Yeah, and particularly in English. Okay, there's another touch of the 618. The 5 minute 618. So it's strikingly good news, but that means the Fed can't cut interest rates, so that's bad news. Good news is bad news, everybody. And even today's claims are a little low. They're not dramatically low, but they're not supporting the Fed's theory anyways. Boop 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 boop. Pretty close to a predicted bottom anyways, huh? Beautiful trend off these moving averages. Not always. No. Good news is not always bad news. Most good news is good news. But what the market is paying attention to and trying to decide is what is the Fed going to do next. The big question is 50 basis points or 25 basis points. This data suggests that the Fed should not cut by 50 basis points. Well, 2 days ago, half the market thought, or I should say a week ago, half the market, 50% of institutional investors, bankers actually, thought the Fed would cut by 50 basis points again. That has dwindled now to 25%. Well, actually, the last time I looked, 33%. It's probably dwindling down to 25% now with this new information. It does not seem likely the Fed's going to cut by 50 basis points if you read the news. Now, if you actually listen to the Fed, they actually told you they're not. They're not going to do it. So we already knew, but I can tell you a week ago, half the market didn't know that. And now 25% of the market still thinks 50, but this news will probably change their opinion. So what happens when they change their opinion? They have to reverse the positioning that they're in. So if they were selling dollars, now they have to buy some dollars back, which means on the short run, the dollar gets strong. And that's what's going on now. Okay. Yeah. That's right, Bernd. He actually said it straight up. Straight up, clear as day. And yet 50% of the market didn't know that. So I was talking earlier today about how I've lost a lot of respect for quote unquote smart money. They're not that smart. Yeah, and it's quite clear that they don't do the work necessary. And so we can beat them too, Bernd. We have the advantage. At Traders, we have it all plotted out, like, right? Like we're good. These numbers are crazy. New orders, 52.5. Wait, no, that's the old one. 59.4 new orders. Wow. Same number for prices paid, 59.4. Tons of inflation. Damn. ISM Services headline, 54.9. Wow. Those are big numbers. Now on Tuesday, we went through and we read the PMI data out of Europe and UK, and UK is doing good. Europe's doing bad. And the United States is just like blowing the doors off this. Okay? Crazy, guys. Crazy. Yeah. Crazy. Crazy. Crazy for loving you. People just will not leave me alone. Two emails at 11 minutes apart. One from my ophthalmologist and one from a urologist. I wonder if I can just combine the two and get it done. Get it done quickly. Yeah. Well, got to save time somehow. Juliet, the answer to that is it's already planned. So I described in today's video the likely schedule for cuts. So even if the news comes out good, they're going to cut, and probably the first meeting of the year is when they change the schedule. So right now, there's 2 more meetings this year, and they're going to cut by 25 basis points each time. We already know that's already plotted out. All right, so that gets us down 1 full percentage point, right? Okay, great. Then starting in the new year, what I don't know is it the first meeting or the second meeting? Okay, so I don't know. But in one of those meetings, they're going to pause. And then we're going to do cut every other meeting. So cut, pause, cut, pause, cut, pause, cut, pause. But we already know this. Okay, Juliet? How do I know? Why do I have such arrogant confidence? Well, that's not arrogant. I'm informed. But how do I know this? See, if I don't have any data to back it up, then it's arrogance. It's not arrogance. It's egotism. Okay? Why is it not egotism? See, ego is important. Ego gives you the confidence to get up after you've been knocked down. Because you've been knocked down before and you always get up. So like when you go through a bad trading period where you're bleeding some money, you can't get any trades. You can quit, or you can say, I know how to get through this, I just need to regroup. That's ego. Ego is important. Egotism is where you have nothing to back that up, but for some reason you're crazy confident. And you're like, why? Okay? And a lot of people have it because they think they're good enough and smart enough, or it's been ordained from the heavens, or it's just your future. It's like, I'm going to be a successful Forex trader. I'm going to buy a Lamborghini. And you're like, why? You're not doing any research. Your strategies are all over the place. You have no consistency. You don't let your winners run. All your losses are big. All your winners are small. Why do you think you're going to be a success? I just know it. All right, that's egotism. Okay, so why am I so confident in my projections for the Fed 18 months in advance? Where I can say, cut 25, pause, 25, pause, 25, pause, 25, pause, 25, pause, 25. Type in a question mark if you don't know. Yeah. Yeah, I got that, Dougie. Yeah, Jim is right. The summary of economic projections. Yes. So they already told us in writing. And so we have it plotted on our charts at traders.com. Now, that can change, but it is fact. So I'm just telling you what the Fed has told us. I don't have an opinion. That's just what the Fed told us. So we have it plotted out. Everybody else guesses, gives their opinion, but their opinion doesn't matter. The Fed's opinion is what matters. Andrew says, have you seen FX Street's AI-driven Fed tracker? Yes, in fact, I spoke to them early on when it came out because I'm also building one. And mine is also pretty good. And then I got sidetracked doing other stuff at traders.com. But we're half done. Like, we're more than half done. And the one we've built is quite good. But my vision is different from FX Street's, I think. I haven't looked at theirs recently. But I want to quantitatively analyze their sentiment, which is different. So I'm analyzing the speech for bullish and bearishness, which they are, but then quantifying that mathematically and then give you a Fed tracker tool. Oops, did I say that too soon? Yeah. So Andrew, yeah, I've seen it, and I already have one. Yeah, I already have one, in fact. Yep. Yeah, that's amazing. Yeah, it's true. Like, literally, I started that, oh my God, 6 months ago. And we put it on the back burner just because I got other things. You know, I got the idea of combining our our, how do you say it? I don't like saying AI anymore, but our data-driven analysis of charts and fundamentals, data-driven analysis of economics and technicals, into one place. It dawned on me that what is being built needs to be holistic. So that is probably an upgrade that I'll offer by the end of the year, Andrew. We're done the analysis, and I'll tell you, Andrew. I don't know what FX Streets does, right? Like, I know it reads it and it says hawkish or dovish and gives it a little score. Mine will actually write a summary, like analytics. Yeah, I got that, Denise. Yeah. I could see you copied and pasted it too. Huh? Yeah. You got that off the TRADARS site, maybe, or the other one, but either way. So anyways, going back to Andrew's thing, ours is going to read it like it's me, give you a summary like I read it for you. Ours. Denise, ours. And then the next step, Andrew, like I said, is to create a database that will quantitatively track the changing sentiment at the Fed. So yeah, that's next level, I think. But I'll tell you, Andrew says at the bottom, he gives me a compliment. He says, I bet it can't match your knowledge. You know what? AI is pretty good. And when we were building it, it was built on ChatGPT 4.0. And so there's probably new models now higher than that. I haven't looked in a few months. But it was amazing where you gave it prompts assuming it was an economist. Not telling it. So ChatGPT 3 and earlier, you would have to define like what is hawkish, what is dovish, what makes things hawkish, what makes things dovish. In ChatGPT 4, we just said, look at it, read it, give it a score, hawkish being, let's say, 5 and the most dovish being -5. But you don't teach it economics. This is the weird thing, Andrew. You don't teach it economics. You don't tell it what hawkish and dovish is or what leads up to what is known as hawkish or dovish. You just tell it. And it's good, Andrew. It's good. Like, it's a little surprising. If you guys haven't played with AI, it's very quickly leaving you behind. And I would literally take a class. I told my father this. I said, look, you're 82 years old. You can give up or you can learn new things. I'm like, go online, take a class on artificial intelligence, right? Just learn. It'll be happening long after you're gone, but just for the sake of staying sharp, staying focused, staying in tuned. Watch Fox TV a lot less and take a class. And so anyways, it's extraordinary now that you could just hire an economist for nearly free and have it work for you. So why would you not do it, right, Andrew? Like, why would you not have a tool like that? It used to cost $200,000 a year to have an economist on staff. No, well, it's cheaper now. So yeah, I'm telling you, we got some more and more and more and more and more and more cool stuff coming your way. More and more and more cool stuff coming your way. So stay with traders.com. So here we are stuck on a 5-minute chart, euro dollar. And what did traders tell us? Traders told us that this is an important news event. We all know that. It's going to create volatility. We all know that. But traders has analyzed 2 years of ISM services and said, it's not that good. It's mediocre. There's no reliable pattern. And so now it's been, 26 minutes since the news came out, and we got the vol, and the direction's been okay, but it's been quite mediocre, don't you think? Okay. $25 pips. But I just want to reinforce, I don't think we have our direction wrong or anything like that. But as far as the scalp, it was mediocre at best. Okay. I don't really scalp the news anymore. When I first started trading and when I first started non-farm payrolls live over at FX Street, I would have made 500 pips by now. Probably 300 on the way down, 200 on the way up. I would trade both ways like a broken gate. And by the way, there was a time, I remember I was speaking at one of the conferences in New York City. And I remember, I think it was the panel discussion. Ashraf Ladi and what's the other guy on CNBC now? Brian? Can't remember his last name. Anyways, I do remember being on the panel. And but one of the things we talked about before the panel started, we were all just hanging around as traders. And we were talking about how ISM services was bigger than non-farm payrolls at that time. Right at that time. It was moving bigger, and for whatever reason, it had to do with the central bank. It's always about the Fed, right? And just the situation where suddenly ISM services was a better trade than NFP. But that was at a time, again, where in a half an hour, you could make hundreds and hundreds of pips. And so now a half an hour goes by, ISM services is just amazing. And it dropped from 40 to 15. What is that? Okay. I got chunks of corn in my crap bigger than that. Yeah. So whatever. I think we got the direction right and everything. But this is just boring as heck. Now, they're not all like this, but we did see the weakness in this from the analysis at TRADARS, right? Traders.com told us all of this. Tomorrow's going to be a better trade. We already know this. But this is an all right trade, I suppose. But what is the secret sauce then? Knowing when to let your winners run. Not scalping the news. You can pick up pips here and there. It's entertaining and all that. News flow keeps the markets moving throughout the day. That's cool. Intraday trading like at market opens. That's cool. Day trading into swing trading into position trading seasonality so that you know if you buy in October, you hold until June. That's the money shot. Okay? We know amateurs don't know how to do that. But there's no reason for you to trade like an amateur anymore. That is a choice. If you don't use traders.com, you are making a choice to stay an amateur. It's pretty simple. Okay? So make a choice. I hope you choose to join traders.com. So we have for those that are already members of Traders and you're in one of our teams, you know of our secret tool that we're testing right now. I'm going to head over to that new secret tool. And I hope that you will join me, and I'll hang out there. I'll be doing work, but I'll also keep one eye on the prize. So if you're going to be over there, we can be together throughout the rest of the afternoon. And if you're in, the news trading team and the pro team also have a simulation. I guess I should just bring it up. I should be saying this. It's just easier visually, to show you visually. Okay, next up on deck, for pro traders and news traders, you have simulation studies at 1. And then at 4, you have swing trading with me. And then tomorrow morning, okay, everything's cleared off because of the markets being frozen pre-NFP. But I'll see you tomorrow at FX Street. Here's the link. So that's the upcoming schedule for the rest of today and tomorrow. Now, if you're like, man, I don't see this on mine. Well, it's because you're not a pro member or you're not a news trading team member. So all of this schedule is completely dynamic based on your membership level, which is really cool, right? So you don't get cluttered with stuff that's not appropriate for you. Also, on Monday at the London close, which is 11 a.m., we are starting a new series called Trading Strategies for Stock Indices. So if you like S&P 500 E-minis, if you like Dow and NASDAQ, if you like FTSE and DAX and Nikkei, okay, Peter Ward is going to take you through that. Dude, we got 31 going. Holy sweet. All right, cool. So all you have to do is RSVP, and that is available to everyone that is a member of traders.com. Oops, I have to go back to coaching. Sorry. All members, base members, team members, pro members, everybody is welcome to attend. And that's every Monday at 11:30. Yeah, Trader Ward's going to be there. Cool. Neat, right? Right? Well, don't thank me. Thank Trader Ward, a.k.a. the Pete Meister. Petey. Peacock. Oh, what a great. Life is great. Life is good. Life is beautiful. Peace on earth. May the pips be with you. May your profits be above average. And if you're going to continue with the scalp, I hope it works out for you. Have a wonderful day, YouTube. Remember, you're beautiful even without a filter.